process check here. So I'm on a couple of laptops here. This is all kind of new for me in terms of doing a webinar on this stuff. So I just want to make sure you guys can see. First of all, make sure you guys can hear. That should be a good plus. Hey, Jim. And then you should see a slide that says, welcome to the webinar. Okay. Fantastical. So, so what I want to dive into tonight, and for those of you that are room members, this really is just kind of an educational piece, and for those of you that are not room members, we'll have an opportunity for you to kind of learn more about it. And what I want to talk about tonight is, oh, awesome. Let's see here. There we go. Okay, so we're just going to dive in tonight. We got a really interesting market, and want to talk about the idea of, so you want to be a trader, and just viewing some of the key things for understanding not only kind of how trading works. It's always good to kind of get back to basics, but also in anticipation of a lot of kind of hype and hysteria this year. I equivalent, to me, 2018 is a lot like 1999. Okay, there's a lot of volatility in 1999. A lot of that volatility was to the upside, but a lot of that volatility was to the downside. And I love those kinds of markets because it creates a lot of opportunity, but we cannot get lulled into the complacency of thinking that things will always be the same day after day, week after week, because it'll turn out missing a lot of opportunities, okay? So that's what we want to do. I do know, like in Austin right now, they're getting freezing rain, and in Cayman it is 79 degrees. However, it has been rainy and windy, but it is still 79 degrees. So the biggest danger of success in trading is that you get a couple of winners under your belt, and it automatically kicks in the attitude that causes consistent losses, okay? So path of decline, you get 5 or 6 big winners under your belt, and what can happen is you get some success, and that can turn into arrogance. And then that switches into a mode of competition, which then turns into a lack of an imagination, a failure to adapt, and ultimately a collapse. And this is a cyclical nature in stocks. It happens all the time with traders, okay? And it's ironic because about the time you start doing really, really good and you start experiencing success, this is what kicks in, and it's devastating. And instead, you want to always be thinking of renewal, innovation, initiative, imagination, and that's what leads to success, okay? And be very, very careful of all the stuff that can come after success. Also keep in mind, especially at the beginning of the year, you want to have a good, buy the dip, you want to have a good indication of what your goals are, okay? Is your goal monthly income? Is your goal exponential account growth? Or is your goal steadily growing your account, okay? Or a bit of all three. But the common theme is you got to understand, because if your goal is monthly income, then you're going to be structuring your trades a lot differently than if your goal is exponential account growth, okay? So you've got to know that from the outset. But the common theme is once you establish that, you just say, how much am I willing to risk to make X amount, all right? So if you want to double your account this year or whatever goal your is, then how is that going to look? And then also, do you wait for the next big trade or do you focus on base hits? Now, one thing to keep in mind is that while big trades are nice, you do not need them to meet your account goals. They're nice when they happen, okay? So the other question is do you know yourself well enough to know how to best trick yourself into consistency, okay? Do you get lazier and more careless when you have a lot of profits? Do you have a plan, or are you addicted to the action? Okay, you want to know that about yourself, because as a discretionary trader, you have to deal with that. You have to learn how to manage your own personality. So some of the things that I do in terms of tricking myself is I wire money out when I reach a specific level, and then I start over, okay? That's, for me, very beneficial. It keeps me from getting complacent, but it also shows me that, it reminds me that the job in trading is to be able to extract money from the markets and then turn that into something. Typically for me, I like to turn that into an experience or a tangible asset, but it helps keep it real instead of some video game. I also like the idea of trailing real-time equity, okay? What does that mean? So if you have a, a $50,000 account and your goal is not to lose more than 5% for the week, okay, what happens if you have $50,000 and it goes up to 60 and then you get stopped out with equity of $45,000, okay? Does that fall within your plan? No. When you get up to 60, raise your trailing equity stop to 55,000, okay? You've managing not just the positions that you have, but your NLV, which is your net liquidating value of your account. That's how you start gaining an edge and compounding your gains. So at the end of the day, you've got to start with the risk, and the rest will take care of itself. What happens, we can get careless and we start with the reward in mind, and that can turn into some problems, okay? And this is, I love this photo here because this is, face plant in progress, but this is what happens when you start with the reward in mind in trading. You end up getting into a situation, as they said in Top Gun, a check that your body can't cash. And then the best advice ever I've found in trading is just the idea that is from Paul Tudor Jones, who, this guy trades billions of dollars and has been able to average 30 and 40% a year trading billions of dollars. Now, trading smaller accounts, okay, if you're trading $100,000 or $500,000, 30% a year is not a stretch. But when you're trading billions of dollars and you've got liquidity concerns and you've got to, you can't put a lot of money on one thing, 30% is phenomenal. And what he said here, and I love this, is that if I have positions going against me, I get right out. If they're going for me, I keep them. Risk control is the most important thing in trading. If you have a losing position that is making you uncomfortable, the solution is very simple. Get out, because you can always get back in. And this is one of the toughest things I see with retail traders, is there's this idea that they have to prove themselves, okay? You've got to, the analysis that a person made has to play out, or, from childhood makes a person feel shame or worry or whatever, or something bad's going to happen. And here's a professional trader saying, look, if you're nervous, get out. Okay, and I think that's very profound and something to remember, because it's easy in trading for people to get caught up in the idea that if you make a losing trade, that's bad. And it's not. Your job as a trader is to make small losing trades. Okay, that's what happens. The opposite of that is letting nice trades turn into big losers. Okay, you're going to have small losing trades is the best thing you can ever do in trading, because you get the practice of cutting them loose instead of hanging on. So from there, what we want to think about is building confidence, okay? And confidence comes in 3 steps. You got to start with a commitment, which leads to courage, and that leads to confidence. Nobody likes to go through the courage part, because doing something that requires courage makes you feel a little shitty, okay? That's why it's called courage. The idea is fear is wetting your pants. Courage is doing it with wet pants, all right? And it's just being able to kind of step through that. But none of that's going to happen if you don't commit, okay? Not to becoming a trader, but becoming, because anybody can do that. Anybody can push a button and become a trader, but to understanding the rules of the game and then becoming a professional trader by executing on a plan, okay? So most people, frankly, can't do it. They're too stressed out, focusing on what I would call first world problems. Now, these are some funny Twitter things I found for people that get stressed out. I don't know if you guys know anybody like this. I do, and I always find it kind of hilarious. So here's a girl in the corner. I just had a cup of tea with soy milk. It was one of the worst decisions I've ever made in my life. And then we have Steve down here. Had to turn down the brightness on the iPad because it hurt my eyes. Megan, everyone here has a Beamer and a Lexus and a Mercedes and staring at me in my Jeep because they know I don't belong. Megan, they don't care that you're even there, okay? And then finally, JT Extreme, really sick and tired of this place using too much orange zest in my brunch mimosa. So you've got a lot of people out there that are focused on problems that don't matter, okay? And you want to be, I see a lot of people get distracted by things that don't matter in any way, shape, or form. If you can kind of block that out and focus on trading, it gets a lot easier. So we want to keep that in mind. And And then I always like Alan Watts. He's always good for wisdom. Says, when you're ready to wake up, you're going to wake up. And if you're not ready, you're going to stay pretending that you're just a poor little me. So it's one of those things where, you know, if you snap out of it and focus on what's in front of you, this can be a lot more fun. So key points in trading: have a setup, have pre-planned low-hanging fruit targets for at least half your position. Note, anything outside of the expected move is not low-hanging fruit, okay? And that's something that we hammer over and over and over again. Have a catastrophic stop in place if you're risking more than the premium for options, and always with futures, okay? Because you never know what's going to happen. And then recognize, and this is one of the things that I really, really emphasize, is recognize when the trade is no longer working so you can get out well before your catastrophic stop, all right? And at this point, you just have to decide, do you want to make 20% a year or 100% plus per year, okay? Knowing that there are no guarantees. These are the two sandboxes to choose from. If you know what you're doing, these are very achievable goals, okay? Now, you can never plan for more than 100%. All when you say, okay, I want to try for 100%, that defines how much you're willing to risk. The upside is not capped, okay? Having a goal establishes risk controls, and that's it. So as an example from last year, and I'm still trying to figure out this year, I've got a couple of different accounts, and I'm starting to set those up. I think one's going to be about 50,000, maybe one, a couple 100,000, but we'll just kind of see where they are. This is one where of July, we took an account of $125,000 and ran it up to, at this point, $772,000, and just doing all the trades in the room. And obviously not everything's a winner. And this particular thing here, I'm losing $6,000 on NVIDIA or on TAL, making money on NVIDIA, and yada, yada, yada. But it's all about position sizing and your goals. And I always like to say, okay, looking at the statements. So we started here in March with $195,000, ended up with $278,000. Starting here in May with $415,000, ended up with $655,000. And you'll note here that I start taking money out, okay? And I'm a big fan of taking money out. And I typically try to do this with a weekly wire. And it's like, okay, let's take out 2.5%. That's the goal. And as the account grows, your 2.5% that you wire out also grows. Now, once in a while, and hey, it'd be great to do that again this year. Every once in a while, there'll be some huge trade that comes up. This was one in Tesla where it was the first time in one day I ever made $1 million, which was pretty fantastic. And I practiced what I preached there. I took the money out and I put it into land in Wimberley. And this is something that I still continue to do. And it's an amazing place, and I love it that it was bought partially with trading profits. So how do the markets work, and how is this stuff kind of possible? Well, the reality is the markets are a mix of, at the end of one spectrum, large amounts of money moving in and out of asset classes, okay? And this can be tracked. At the other end of the spectrum, a mob mentality and all the emotional and psychological traits associated with large groups of human beings piling into wrong assumptions, aka dumb money. In between these two extremes, you have high-frequency traders and algos taking their 2 pounds of flesh along the way. So where do we fit into this? So our place is, and I say our place is retail traders, okay? We're retail traders because, we're not trading a hedge fund. We're trading our own accounts, anywhere from, $10,000 even up to a couple $1 million is a retail account, okay? A couple $1 million is a healthy retail account, but, it's not a $1 billion hedge fund. So our place is very, very enviable. We are trading what I would call negligible size that the markets don't even notice, to an extent. Especially, your 10 lot on Apple, nobody's going to know. Heck, a 100 lot on Apple, nobody's going to notice. You're not going to move or impact the market. They're not going to come after you. So what we have that the big boys don't have is the advantage of liquidity. Now, they have advantages over us. They've got better information. They have markets that they can trade that we can't. But we have the advantage of liquidity, and so we can kind of get into things that they can't. That's a huge advantage. So at the end of the day, because of our flexibility, we have the opportunity to make exponential gains. Our biggest danger is ourselves, thinking that one day we will know it all when it comes to the market. So I always love this. I love this. This is a quote from Michelangelo when he was 78 years old. I am still learning, okay? And as a trader, the moment you decide that you have nothing else to learn is the moment the market starts taking money away from you. So, yeah, so AJ, what is a catastrophic stop loss for futures? Well, it's really based on your account size. So if you've got 100,000, if you say you got $1,000 account, right? Well, if you're trading futures and you lose $1,000, that's catastrophic because you just lost your entire account. But if you have $100,000 and your stop loss is $1,000, that's completely fine. So catastrophic to me is the impact it'll have on your account. I think like on one trade, if you lose 30% of your account, that's hard to recover from. Okay, so that's what I mean by catastrophic, and I mean it as the maximum loss you're willing to take on a trade. So say it's like, okay, I've got an aggressive futures account. I don't want to lose more than 5% on a trade, which is very aggressive. That would be your catastrophic stop loss. Okay, so that may be a term that sounds like catastrophic. Sounds like, okay, if it hits it, you're done. And it's no, catastrophic means that if it hits it, that's the maximum loss you're willing to take on that trade. So what about this particular market? What is going on in this market? So in a normal market, it is not a big deal to ride out the ebbs and flows. A market moves up, pulls back 382%, and continues moving on to new highs. In this market, a stock can move up, and instead of pulling back the next day, it completely reverses on no news and takes out your stops. We saw some reversals today. Or worse, everything looks guaranteed to go down, and this happened a couple of times last year, but the markets rally the next day in the mother of all short squeezes. So the same is also true of the upside. When everything looks at its most safe, that is typically when the markets will fall, okay? So a normal uptrend looks like the chart on the left. You make a higher high, you pull back 382 to 50%, you shake out the weak hands, you go make another high, you pull back 382 to 50%, give or take, you make another high, and that's what a normal uptrend looks like. What we are in right now is parabolic, which is a much different market, okay? And you can see here on the right, what a parabolic move looks like is you've got this rounded kind of a bottom right here, and then it goes straight up. And this is what happened to Bitcoin. But then once it takes out this parabolic curve, things start to fall apart, okay? So I was looking at some charts tonight, and you got in using Chrome. Good, awesome, okay. So if you have, I don't know how many of you trade Bitcoin. I trade Bitcoin. And if you look at the daily chart of Bitcoin here on the left and compare it to the monthly chart of the NASDAQ in the 2000 crash, to me they look exactly the same. Bitcoin is compressing this action, okay? Now, what is happening every month in Bitcoin took a year to play out in the NASDAQ. So if you look at this over here on the left, you got this beautiful run up, and now we're down here and consolidating. If you look at the NASDAQ, you have this beautiful run up, and now we've come down here and we're consolidating. What happened from here? Did we go up to new highs to 8,000 like all of the shoe shine boys and the refrigerator repairman thought? Or did we keep going down? Okay, we kept going down. Now, look, I don't know what Bitcoin is going to do next. I don't know if this thing's going to 30,000 next or if this thing is going back to 6,000. I do believe in blockchain. It's here to stay. There's a lot of amazing things going on, but that in no way, shape, or form means that Bitcoin is going to go straight up, okay, every day. NASDAQ, this is the invention of the internet. It's a big deal today, right? But it got a little ahead of itself and it needed some time to kind of flesh itself out. This is the kind of movement we see in today's marketplace, and we want to understand how it looks. What does it mean? Now, if Bitcoin here is trading 1 month for every year in the NASDAQ, you know, the NASDAQ took 17 years to take out this high, then conceivably it could be 17 months before Bitcoin takes out this high. Okay, so just kind of keep that in mind. These are the kind of things that are happening in this market. It's very exciting. In Bitcoin, we may wake up tomorrow and it's 30,000, right? But we want to have, you know, this is a chart of crowds. This has nothing to do with reality. This is crowds, and that's what's happening in Bitcoin, and that's what's also happening in some aspects of the stock market as well, okay? And you know, again, this is a kind of from the NASDAQ, and also you could say it with Bitcoin and also some of the stocks that are out there today, you get media attention, you get enthusiasm, okay? So here the smart money's getting in, then institutional investors, then public, then you got greed, then you got delusion, and a new paradigm, okay? And this bull trap here, this is where I started getting emails from people that shouldn't have been emailing me about Bitcoin, like my neighbors, okay, and different things like that. And now we're going to see, do we get fear and capitulation and a reversion to the mean, okay, before we go higher again. It's just important to understand these patterns and to be able to trade them. So to thrive in this market, for 100% plus annual returns to be possible, we must know high probability, directional, shorter term trading techniques that you can use on any account size. For 20% annual returns, we must know high probability income generation techniques that take into account volatility and the Greeks. Okay, I personally like to use a mix of both. In a perfect world, my account can grow while I'm taking money out of it, and I'm a huge money out of it. Think of it this way. If you start off with a $100,000 account and you run it up to $200,000 and then you have a 40% correction, if you didn't take any money out of it, all right, you lost $80,000. But if you happen to be taking money out along the way, then all of a sudden the 40% correction isn't as big of a deal, okay, because it's on your remaining capital, not all of your capital. And it is possible to go for just 100% on premium selling. You will just be taking more risks, and you'll have to focus more on one-to-one risk-reward ratios. All right, so the key is to understand the game, then work to continually put the odds in your favor. So also, I think one of the most important things that you can do in a market like this is to think like a market maker. As retail traders, we are trained as analysts. This means our ego is on the line on every trade, okay? We look at a chart and say, okay, the moving averages are doing this and the squeeze is doing this, and so I think that the market will go higher based on this. Okay, that attitude, if you're not careful, can lead to ego being right or wrong. Okay, and that's dangerous. All we're doing is playing probabilities. Okay, I always like to think of it this way: if you know how to count cards and you're in Vegas and you get a high count, your odds have suddenly increased 75% that you're going to get a blackjack. Okay, so you're going to bet $100 black chips on that. But when the count drops back down and you know that your odds of getting blackjack are like 20%, you're going to be betting $10 chips. And it's the same in trading. If you've got a high probability setup that's proved itself in the past, make a bet. Okay, but if you got nothing going on, the beauty of it is we don't even have to place a $10 bet. In Vegas, you got to place that $10 bet so the pit boss doesn't kick you out. But in trading, you have the choice of waiting, okay? So think like a market maker. Wait for that setup. And then secondly, what does it mean to have no ego? Well, it means this. Market makers say, if I am losing money, I am wrong, okay? Is the mantra that they embrace. They know that that attitude is their lifeline to success. If I am losing money, I am wrong, okay? You write that down and put it on your computer. The reason doesn't matter. Your analysis may be solid, okay, but there may be some guy at a hedge fund that has to dump that position to cover a margin call, and that has nothing to do with your analysis, okay? So always keep that in mind. There's things that are happening out there in the market that have nothing to do with your analysis. So if you're wrong, get out. And the way that you know you're wrong is that the trade is not working. So tip here, if you are unaware, your mindset is a direct reflection of your last two trades, which will of course impact your next two trades and so on until you run out of money. Just keep it simple. So the markets and odds ebb and flow. So price movement is random, yet repeats history, unpredictable, yet has periods of consistency. Within this environment, you can put the odds in your favor with both a technical and a mental edge. And even with the technical edge, the markets will throw you a curveball once in a while, always when you least expect it. The key is to know your risk, okay? Once you know your risk, you have complete control of the situation. You never want to get focused on the fear of the unknown, because that'll screw you up. Just focus on the risk of the unknown. You don't know what's going to happen next, but you do know what your risk is. That's a much different thing than being afraid of the unknown, okay? And remember, even with a mental edge, that edge is not permanent. It is something that needs constant vigilance, or it will become replaced with conflicting agendas, okay? Conflicting agendas like, man, I need to make $500 today. That's a conflicting agenda from, let me just see what the market's doing and seeing what it's offering me. When I talk to guys that all they do is run systems, they are continually tweaking their systems, and then they watch their systems to see how they perform. If their systems are not performing well, okay, it's okay to have a couple of losing trades, but if all of a sudden it's like, man, last quarter the system killed it, and now over the last 3 weeks it's been kind of bleh, it's telling them loud and clear that the markets are changing. They need to shut that system off, okay, and find something else. So within this environment, you can put the odds in your favor with both a technical and a mental edge like that. So that's the key with that. Just understand your risk. Okay, and so what about pressure? There's a lot of pressure on traders, okay, and you've got to be aware of this or it will crush you. So professional athletes train hard for every shot, every swing, every catch. They understand high pressure situations. That pressure only exists if you are concerned about the income. Okay, I'm going to say it again. The best ones have learned that pressure only exists if you are concerned about the outcome. So the best way to equate this to trading is practice your trading skills on each trade and don't worry about the outcome. If you're practicing your trading skills on each trade, the profits will take care of themselves. Small wins and big losses are not sustainable. This is like eating like a bird and defecating like an elephant, okay? So think about this too, because I know this is the hardest thing I see people struggle with. In trading and probably in life, it is necessary to cut the losers out of your life if you want to live your dream, okay? Your losing trades will drag you down. Get rid of them. And this is from Mark Douglas, and I love this, and I like to think about this before every trade that I do, and I just find that it's so important. Did you see it? So with this mindset, on each and every trade, you are trading like a full-on pro. Bill, what is a doable ROI on an account for a novice trader per year? Bill, I think a very reasonable goal is 100%. So if you think about that, what does that mean? That means about 2% a week. Okay, so that's about 8% a month. Trading options, it's very reasonable. What happens is it's big losses that knock it down. So you actually can trade a lot smaller than you think and achieve a potential return like that. Okay. Okay, so here's the thing, and yeah, you guys will totally have a copy of this. So this is the thing that helps me get in the right frame of mind for every trade. One, anything can happen, okay? It's knowing with absolute certainty that anything can happen, okay? Two, you do not need to know what is going to happen next in order to make money. Three, there is a random distribution between wins and losses for any given set of variables that define an edge. What do I mean by that? You've got a setup that has a 75% probability of success. Out of 100 trades in a row, you're not going to have 3 winners and 1 loser, 3 winners and 1 loser. You could have 12 losers in a row, okay? But over the course of 100 trades, that falls within that 75% probability of success. You got to remember that. That can freak people out. That's why risk control is so important. An edge is nothing more than an indication of a higher probability of one thing happening over another. And last but not least, every moment in the market is unique. Okay? Large wins and small losses, that is a sustainable business model. You also want to know the human pain points. Okay? This is something that I'm a huge fan of, because when I first started trading, I had a lot of pain points that I didn't understand why I was getting myself into those situations, but I realized that if I could take the other side of that, I could make money from it. So market participants are ruled by greed and fear. When they are greedy, they stop worrying about the downside and just load up on longs. You know, how many people woke up this morning going, my gosh, the NASDAQ, it's up 40 points. I'm going to load up on longs right here. Okay, not a good move. Typically at the top of a move, because that's when it feels most safe. That's when there's the most social proof. Hey, everybody else is doing it. Okay, worst time to get in. When they are fearful, they panic and they sell, 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 and worse, short, 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 typically at the dead lows, gets the reversal that rips their head off. Always think in terms of, you know, if you could have two, Bill, you'd asked earlier, as a novice, making 100% a year, is that achievable? If you have two well thought out, well planned trades a week, that is achievable. What happens is people get excited and they do 20 trades a week, okay? And those two but then they pissed away their capital on those other 18 trades where they were screwing around. That is the death knell of most traders, okay? Just think in terms of 2 or 3 well thought out, well planned trades a week, and you'll be on your way. You'll miss a lot of stuff. That's fine. I'm here in the Cayman Islands. We were swimming today, paddleboarding. And I asked my kids when they came out of the water, I'm like, did you guys have fun in the water? I said, gosh, Dad, you know, I'm pretty depressed because I wasn't able to touch all the water in the ocean, right? They're all ecstatic. They're like, yeah, I had an awesome time in the water. And it's the same thing in trading. You're never going to catch every trade, but that is not a reason to feel discouraged or depressed. Focus on 2 or 3 well thought out, well planned trades a week. Screw everything else. Okay, I know plenty of traders who've been doing this for 20 or 30 years, and they look at 2 markets or less on 2 time frames or less, and that's all they look at. They don't care about anything else. Okay, and that's just important. You find a niche and you master that niche. So I've got a list of things that I like to look at, and this is the one I want to share with you guys. And I've talked about this in the room, but I just think this is so critical because it's always right at some point. So 90% of the time, this is the combined index equity put call ratio. And like this, I'm not always right, but when I'm not, I'm right. So 90% of the time, this indicator is neutral, which causes a lot of people to dismiss it or forget about it. But the extreme readings are opportunities to take the opposite side of human insanity, a highly profitable pastime. If someone is convinced they are right, intellectually or morally, then there is nothing we can do to change their minds. And in trading, the only thing that's going to change their minds is massive pain of loss, okay? Fascinatingly, the market does not care about people's convictions and will happily destroy them. So what do I mean by the combined equity index put call ratio? What this does, and the readings here are between 1 and 0.75. At 0.75, it means everybody and their mother is long. And when that happens, just think of it as a ceiling in the market. It's a ceiling in the market that prevents it from going higher for the most part, and eventually, typically will sell off. Okay, that's a very classic case there. Now you can see that happens over 3 or 4 weeks. It just doesn't go higher and eventually falls. Conversely, if it's like if we're going down and everybody's getting too bearish, okay, the put call up here says, look, everybody's bearish here, everybody's shorting, and if everybody's shorting, there's no one else left to sell. And if there's no one else left to sell, what happens? The markets start to bounce. Okay, and here you can see we bounce, 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 bounce until now everybody feels like it's safe. Okay, so the person who missed this and has been watching it and watching it and watching it for 6 weeks goes, boy, you know what? Now this is looking good. Looking good, Billy Ray. I'm going to go ahead and get in here. Okay, great. That's, you know, look what happens. Oh, man, I can't believe I got stopped out. Really? Panic, everybody's short, rally. Panic, everybody's short, rally. Panic, everybody's short, rally. So I bring this up because look where we are right now. So 0.75 is kind of the level. Now, you can see here that we kind of topped out. We've obviously had a very explosive move up in January. Okay, and I'm the first one to say, it's like, wow, that's pretty awesome. I wasn't expecting that. But the put-call ratio is the lowest it's been in 2 years. And it is very, very, very hard for me to get long the market when the put-call ratio, when everybody and their mother is long. Now, what does that mean? Does that mean I just sit there and watch? No, there's others. We've been long the euro. We've been long gold. We've been long some of the crypto stocks like Overstock.com. So there's opportunity there, but it's important to know stuff like this because everybody and their brother is long here. And if everybody and their brother is long, that typically means we're in, and again, I want to emphasize, it doesn't mean we're in for a top. It just means like, hey, don't be surprised if we see a violent correction. because the market is screaming, or we top out a little bit, okay? So we just want to be aware of that. So the paradox, if everyone loves stock and everyone has bought stocks, then there is no one else left to buy stocks, okay? You could also say the same thing about if everyone loves Bitcoin and everyone has bought Bitcoin, then there is no one else left to buy. Starts to drift lower, starts triggering stops. If this gets too lopsided, then a stock or an entire market can fall very hard, very quickly, just like the NASDAQ did in 2000. And the market never escapes the cycle. Things just don't go up forever. Things don't fall forever, okay? It's a cycle. And of course, the opposite is also true if everyone hates stocks. The other thing I like to look at is the daily price action of the S&P 500. Okay, at the end of the day, the final arbitrator of the market is price, the price people are willing to pay. And the first price you need to look at is that of the main market, which is the S&P 500. This is represented by the SPY, which is an ETF, or the SPX, or the ES, which is the mini futures. They're all the same, so let's look at the SPX. I'm a big fan of the moving averages. I look at the 8, 21, 34, 55, and 89 period exponential moving averages. These are all part of the Fibonacci sequence. So, 1, 2, 3, 5, 8 plus 13 is 21, 13 plus 21 is 34, etc. I'm not using all those, but those are the ones that I like. So if the S&Ps are moving higher and the moving averages are stacked, that is a uptrend. Prices above the 21, that's an uptrend, and there's nothing to do but buy every freaking dip to the 21 that you can. If it breaks the 21, that's a little bit of a flag, or if it gets too far away from the 21, flag. More on that in a second. And of course, the opposite is true in a down move. So this was, I think this was in 2008, but this was a more, when you have the moving average reverse like that, you don't buy the dip, you sell the rallies. So, the one thing I want to keep in mind here, and this is something that we're going to pay a lot of attention to this year, is that, yes, you can have an uptrend, but if it gets too far away from that 21 period moving average, the odds increase at a certain point of exponentially increase of a reversion back to the mean. And that's the one thing a lot of traders are not aware of or used to, is that even in a strong uptrend, there can be brief, violent reversions to the mean. And these are very, very playable, and you just want to be aware of them, okay? And I bring this up because this is a chart of the NASDAQ futures. We are getting signals that it is overdue for a reversion to the mean, and we've got a put-call ratio at 0.70, okay? It's very, very difficult for me personally to wake up on a morning like today and say, you know what, I got to buy a bunch of tech stocks. I'm not. Now, in a normal market, I would actually be looking at getting aggressively short here, but I also don't want to, I'm also recognizing that this market is special. Like, this is a strong market. I'm not really interested in shorting it, but I'm not going to be long right here. I'm going to find other opportunities and wait for that reversion to the mean. So this is a checklist I'm going to go through in the morning. Like, what's the 10-day ratio? Is it bullish or bearish? What is the SPX actual put-call ratio? What's the trend reading? What's the VIX? What's the skew? What is the current price versus the daily moving average? Okay, right? What's the odds of a reversion to the mean? What's Goldman Sachs doing? So goes Goldman Sachs, so goes the market. And what are the transports doing? Are they confirming the rally, or are they a divergence? Okay? So this is something that can be done in a few minutes at the end of each day, and just go through, note where everything is, and make a few ideas on there. And what I do is, if things are neutral, then I'm not going to dive into any big directional trades. If things are bearish, I'm not going to get suckered into buying. If things are bullish, I'm not going to fight the trend. When things are neutral, that's when you focus on income. Okay, great, I'm going to sell premium, I'm going to twiddle my thumbs. But when you get that put call reading over 1, that's when you start looking at some bigger directional trades, okay, to the upside. The other thing to keep in mind is feeding the ducks. Things do not go up forever, okay? Remember, people chase moves all the time, and when that happens, we want to be already in those positions that the other people desire, okay? I want to say that again. We want to already be in the positions that other people desire, okay? It's like if you owned Walmart. You're like, okay, man, Memorial Day is coming up. People are going to want some hot dogs, and they're willing to pay $3 a piece for them hot dogs. And today, 2 weeks before Memorial Day, I can buy these hot dogs at $1. So you load up on those dollar hot dogs, and in two weeks you move them out the door. You feed the ducks. Memorial Day weekend, you sell them for $3, and you get a triple on that. It's the same thing in options. So what you want to do is the stuff that you're buying today, picture in your mind who's going to be buying this from you like in a week, because there's the person out there that waits for things to look safe, right? It's like, okay, now it looks good. Now I'm going to get in. Now all 17 of my indicators have confirmed. Okay, great. You could have mine. Okay, that's the kind of thing you want to look at. Remember, because when you're getting in, you've got to have an exit strategy, and to have an exit strategy, you got to have somebody who's willing to buy that from you to take the other side of your trade. And that's why you feed the ducks when you get the opportunity. Otherwise, you can get your lunch eaten. So I'm obviously a big fan of option trading strategies. And, you know, the one thing I love about the squeeze is that even if you're newer and you don't really understand options, the beauty of this is the squeeze automatically helps you if you're long options, okay? If you talk to a pro, a market maker, they hate buying options. They're always selling premium. I'm actually not a believer in always selling premium. I think there are opportunities when it's appropriate to buy options and utilize that leverage. So when you're in a squeeze here, what happens is the implied volatility drops because it's quiet. That is the time when you want to buy options. Delta 70 or higher, buy them in the money. Then when the squeeze fires, guess what? Not only, in this case, buying calls, right? So not only do you get an expansion in price that benefits your option, you also get an expansion of implied volatility that also benefits your option. Okay, so it's a nice double whammy there when you get an expansion both in price and in implied volatility. It's the only time it makes sense to really buy options unless you're doing some kind of a rapid fire day trade. So the beauty of the squeeze is that it helps you get on the right side of that automatically. What is a squeeze? Good question. So the squeeze, all this is, it's a way to measure the compression of the Bollinger Bands. So I like to look at the Bollinger Bands when they get narrow to the point where they're trading inside of the stock's average true range. And when we get to that point, we call that a squeeze, and we're looking for the Bollinger Bands to expand. And also keep in mind, bull market, bear market, you can also think of bull markets and bear markets on time frames. So sometimes, like today, after about 10:30 this morning, it was a bear market on a 5-minute chart. Bears swipe down when attacking, right? Bulls swipe up when attacking. And so think of that. It all depends on the time frame. So we could be in a bull market on a weekly chart. That doesn't mean you can't short on a 5-minute chart. So one of the tools I like to look at utilizes multiple time frames. And this is a tool that we have where you can sit there and say, okay, I'm trading the S&P futures on a 5-minute chart. Man, the 5, 10, 15, 20, and 30-minute charts are all bearish. If they're all bearish and there's a squeeze, guess what is probably going to happen? It's going to fall. And so we can utilize that opportunity to short the S&P futures or buy puts on the spiders. And then as soon as we start to see the lower time frames turn bullish, we can get out of that, okay? And that's great for doing some quick scalps. I've got I've had a couple of people ask about that, like, hey, can you start doing some more day trading in futures? And certainly will, and we'll start getting that set up again. But something like that is great because you're in and out of it in, 15, 20, 30 minutes. I don't like scalping, like trying to get a quarter, a quarter point. But if there's a potential S&P trade getting 3, 4, 5 points, that's not bad. That's cash. The other thing, of course, is just the opposite. If you've got all the time frames lined up bullish and you get a squeeze, then what we're looking for, again, during this quiet period, that's when we can buy calls, and then we're looking for, boom, an expansion of both price and volatility that will benefit our long calls directly. Mark, day trading the squeeze on the S&P and NASDAQ, do you prefer Delta 70 options or futures? With the 3-minute being my main chart works great. Yeah, okay, so Mark, I'm a big fan of trading the futures directly, especially for day trading. If I'm going to do a swing trade, like say a multi-week trade, I actually prefer options on the Qs or the SPY. And you could also do options on the S&Ps as well. But if I'm day trading, I actually do prefer the futures. A little bit more bang for your buck and no premium decay. That's great. I love that. 3-minute charts, I like that a lot. Okay. So, all right, we just looked at that. And also what I always like to say is don't miss the shift. Okay, that sounds kind of almost sounds like a prison term, but don't miss the shift. So what I mean by that is when you have a squeeze and you've got the ADX, which is the average directional index, when this is below 20, it just means nothing's happening. And when you have a squeeze and it's low like this, and you can see it starts to turn, when the squeeze triggers and the ADX pops up above 20, that's when you get the really big moves like that too. Okay, so just understanding that directional index and what it does and what it measures. Also, and I'm not adverse to day trading options. This is a 78-minute chart on AutoZone. Here you can see we got a head and shoulders reversal, we got a squeeze. This is something that I talk about, a normalized spread when the moving averages are all kind of narrow like that. And I'm fine day trading an option like that. You know, here is this is 5 options. 5 contracts, you know, $5,700. You're buying these options at what was the average price here? Does it show? But I think I sold them at 42. Checklist. So the daily chart review. So what I like to do is, no matter what kind of market it is, this is my quick daily review. Check the overall internals, starting with the 60. With the, you know, are they bullish, bearish, or neutral? Okay. And then on the daily chart, is there a squeeze? So here you can see a daily chart, a weekly chart, and a monthly chart on this particular snapshot here. And on the daily chart, okay, there's a starting. Weekly chart, there was a squeeze that's run out of momentum. On a monthly chart, there was a squeeze that's run out of momentum. I show these because this is kind of where we are right now, where we've had these beautiful monthly squeezes that are they're starting to run out of momentum. Okay, and then from there, remember, so goes the S&P 500. So goes 85% of the stock. So if there's a bearish signal on the S&Ps, guess what? It's going to take most other stocks down with it. But I also like to keep in mind that if I'm looking at a stock, in this case Goldman Sachs, what is its main sector doing, in this case financials, which is what is the main index doing that sector is a part of, in this case the S&Ps. You can get very powerful moves when you have a squeeze, in this case on the S&Ps, a squeeze on the financials, and then pick one of the top 10 stocks in the XLF, and they'll have exaggerated moves to the downside. Here you can see the S&Ps, while they're down 1.6%, that's a big move, Goldman Sachs is down 2.7%. Much bigger bang for your buck buying puts on Goldman Sachs in this case than buying them on the S&Ps. So what I've found is that the best setups have in common the following. You got the squeeze, okay? If you got now the waves are something that I use. I haven't talked about them in a while. So either the waves, or if you guys are familiar with 10x bars, you know, you've got green 10x bars. You got multiple time frame indicator all aligned. So there's a couple things like that, but what you're looking for there is alignment. But I'm a big fan of the highest probability trades, especially bullish ones. You have moving averages that are stacked on top of each other with price above key averages for bullish trades. And what I found is that in lieu of that, it's typically going to be a bearish setup, okay? Within 90% of new 52-week highs and the markets are stable, that's typically when I'll make my biggest bets. I'm also a big fan of just having a scanning tool that indicate high probability opportunities for you. This is a screenshot from our internal scanner that we use. We just like it because you can push a button and say, you know what, find me something bullish or find me something bearish based on specific parameters, and it saves a lot of time, but it also pinpoints specific opportunities that we like, okay? So in terms of Psych 101, so, you know, and I bring all this up just to say, like, hey, we can project a lot of our own stuff onto the markets, and just want to ask yourself, are you going to take profits based on what the market is offering you based on its own internal dynamics, okay, or are you going to superimpose an artificial ceiling on your potential as a trader based on an irrational internal psychological bias regarding how much money over what period of time is too much too fast? That's a mouthful, but what happens with a lot of traders is you start thinking, it's very easy to limit your potential as a trader by getting tied up in the value of money, okay? What can happen one day is somebody's got a $20,000 account and they're making $4,000 on it. This is not right, you know. This is like a TV. This is the down payment on a new car, and they start getting mixed up with it. And then what happens is their account goes back to what they feel is reasonable. It's like an unconscious thing, and it sucks. But the market doesn't care, okay? It doesn't know what you think a reasonable or unreasonable amount of money is. And if you remember that, then what's going to happen is there's going to be about 1 day a month, and this is how I found it works, like 1 day a month, maybe 1 day every 6 weeks, where you are positioned for this really incredible day. And you want to allow that to happen and not get too worked up about it, okay? It's not going to happen every day. That is the reality of trading. It's not something where it's like, okay, you know, I can only make, you know, 1% a month and yada, yada, yada. So just remember that. Also, keep in mind it's a good idea to get into the natural ebb and flow of what a market is doing, okay? From left to right, this is kind of what I like to look at. Where are we at the moving averages? You know, the waves are telling me, is it a bullish or bearish trend? Is there a squeeze? For the ATRs, how far are we away from the mean? Okay, that's important because it's not going to go up forever. The top hats help us with that as well. I'm a big fan of price channels. Stocks tend to stay in there. And then this DMI, this is part of what created the 10X bars. And then also, what are the trends? What's the put-call ratio on that individual stock? Okay. Also, what is the VIX doing? Does the VIX have a squeeze? Look what happens when there's a squeeze on the VIX and it explodes higher. Guess what happens? The stock market craters. Right now, the VIX has a big squeeze in it. And then also, what are the different time frames doing? The daily, weekly, and monthly. All through 2017, we had a monthly squeeze, and it powered us higher all the way into January. Okay. Also, where are we in relation to the 10 and 20-day price channels? Those actually do drive a lot of action, okay? Where are the major trend lines? Oh, and I say DMI explosion, that's kind of also the idea with the 10X bars where we get some momentum with some volume. That's the kind of stuff that we're looking for, okay? Where are the major trend lines? Is the put-call ratio bullish or bearish on the individual stock? And are we implied volatility high or low? See, there's a quick things that we can go through on any stock that we're looking at. But at the end of the day, okay, because everybody tends to focus on entries, okay? Entries are only 10% of it. Exits, if you are going to be a successful trader, then you are going to master the concept of exits, okay? And only half the concept of exits is related to price targets, i.e. profits. The other half is related to stop losses, okay? Keep it simple. Your only job is killing trades that ain't working. And really, as a trader, if you can embrace that idea, you're killing trades that ain't working, you are going to be ahead of 90% of other people that are out there trying to do this. Okay, so that's the stuff that we wanted to cover. Now, for those of you that are already in our trading room and things like that, I think that's great. I think we're on tap to have a fantastic year. For those of you that are here and you have not tried out our trading room, there's a couple of days where you can come in and just try it out and check it out. And this is called an open house. So I'd like to invite you in to our live trading room for a couple of days, and you can see what's shaking. Now, the biggest thing here is what I love about this. And what we're about to do with our trading room, we're about to raise the price. Now, don't worry, if you are already in the trading room, you are locked in. You're grandfathered in for life. Your price will never be raised. But over the last year, we've added a lot of new infrastructure. We've added what I think is amazing, these real-time chat text alerts. So this is on the iOS, like an iPhone, also for Android. And you can see that these are things that went out today. Today, I sold my Euro calls. The Euro's been popping up, and so we exited out of this for almost a 50% gain. That was great. Also set up a Microsoft trade, also set up a JP Morgan trade. And these are alerts that go out, so if you're not in the room and you're at work, you can get them and you can, trade them on your mobile phone if you want to. So what the Option Gold membership includes is a live online trading chat room, and it's myself in there, but I mean there's an amazing team that's in there. I'm following trades by Henry and Danielle and Bruce because they're looking at aspects of the market that I'm not, and it's great. Live charts, you can see what we're watching and look over our shoulder. The trade alerts I just told you about. We've got a premium daily option newsletter. We've got a 24-hour trading forum, and then unlimited access to the trading room archive, which is great. We've also got a couple of bonuses if you sit there and say, okay, well, I like the idea of the open house, but you know what? I want to take my trading to a new level this year, and I just want to join this. Fantastic. We got a couple of bonuses here. The first one is that I'm going to be doing a psychology class, I think on February 1st. I've done this before in the past. It's a nice little, it's like a $197 class, but you guys can attend it for free. And then also, bonus 2 is what's called a simpler store coupon, meaning you'll get a coupon that you can actually spend in our store. So how does that work? So if you decide and say, you know what, this sounds great, you can go to simplertrading.com/house. And you can pick our monthly plan, which is $147 a month. And by the way, this is the low rate. We're about to raise our rate, so you can lock in our rate at $147 a month. It'll include the psychology class plus, it'll include the psychology class. If you decide to say, you know what, I'm going to go quarterly, and what that will do is you'll actually get a coupon that matches the price. So you're kind of getting it that's free. You're getting a coupon for $441 that you can use to buy indicators and other classes in our store, okay? And if you say, you know what, this sounds great, I'm with you guys for the rest of the year, I want to get these alerts and I want to stay on top of what's going on, it's $1,470. That also includes a coupon for $1,470 that you can spend in our store. Okay, so yeah, and just keep in mind, we are raising the price, but it is not going to be raised for existing members. So if you guys sign up with this, you're essentially going to be locking in our current rate. So our current rate for the room is $147 a month. For those of you that are in the room, and again, please don't worry, we would never jack the price up on you if you're already a member, okay? What's going to happen is we're going to raise the prices, and so everybody that comes to our site, say a week from now, and says, oh boy, look at this site, it's only $197 a month. So that's what's going to happen. So we're not in any way, shape, or form going to be raising prices on anyone who's already here. What's going to happen is this is your last chance to lock in these lower rates before we raise them. Okay, so any questions there? Rex, were you in Hawaii when that happened? That sounded, I can't even imagine being there with my kids and going like, okay, there's a missile coming. This is awesome. Yeah, so I would say, yeah, and if you've never done this before, like if you're not even familiar with our room, that's a tough one. I mean, obviously the monthly one is kind of an easy, like, okay, let me try this out for 30 days. But, at least with the quarterly, at least you get like a coupon that you can use and you can redeem that for classes and indicators. Am I writing a new book? Yes, unfortunately it's going along very slow, but I am doing my best. When I wrote the first one, I didn't have these things called kids. Yeah, so we have a futures room and an options room, and then but yeah, for this one, this is where we focus mostly on options. Every once in a while we'll do kind of a futures trade in there, but it's basically an options based room. Yeah, Jim, I need to find the right mix of responsible stimulants. The storm sewer in Hawaii. Yeah, so Rose, yeah, just so you guys know, existing members, we are not going to raise prices. What's going to happen is we're getting everybody. If you're already in here, great. Don't worry about it. If you are not a member and you want to become one, you get to lock in these lower prices now, because what's going to happen is next week we're going to raise the price to $197 a month. Now, while everybody in here who's either a member or is going to be signing up today, your rate's going to stay locked in at $147. You're grandfathered or grandmothered in. You'll never have your price raised on you. But what's going to happen is somebody next week who's new to our site and says, wow, I've always wanted to find a good room like this that has text alerts, and the room is only $197 a month. Cool. Well, they're going to be paying $50 more a month than you are. So this is a good question. So there's a couple questions I don't know how to answer, but I know there's an answer. So one question is, if you're already a member and you want to do the annual, what do you do? I'm assuming that you can call us or email us. And I know that's not a great answer, but I'm about 99% sure that I just don't have a specific on that. Let's see. I would like to purchase the 3 indicator package. Yes, so that's what the coupon's for. Exactly. You guys get into the trades first, or the options much higher after the fact. So this is part of my trading plan for this year, is with limit orders, and also placing orders kind of below where current prices are. Sometimes, we'll see a frenzy where it's like something's moving and we'll get in, and we can create a lot of volume in the room and pop, it can get popped up. So, sometimes it's like, okay, we got to be a little aggressive. But a lot of the times it's like, okay, we're doing a spread. If we're doing a butterfly, we're trying to buy a pullback. So it's a little bit more methodical. Okay. Yeah, let me, let's see here. I'll put in some more contact info here. You can also call us at 512, and what's the preferred email, guys? Info or support? 266-8659, or, let's see, get this down a little bit. Of course, I had flux on when I took that screenshot. Support at simplertrading.com. Okay, so there we go. I think I got all the info there. And again, the big thing here, and I got to, this is something that we worked on for, I think, 17 months, is just this. These app alerts are a game changer, because we can actually just communicate. Just, we don't have to sit there and like, okay, we've got, it's before we have to, when we finally got text alerts, it's like, okay, we can use 140 characters, and it takes 15 minutes to send it out. So we had to be really careful. But now it's like, we can talk and say, hey guys, this is what we think is happening today, and blah, 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 blah. Here you can see on Friday, Henry had some Dow futures that made his targets. So he's, letting people know Friday morning what's going on there. And Danielle's letting people know what's going on with her positions. And Carolyn's like, hey, Tesla's on 30-minute support. You can look for a buy trigger. And so what's great with this is that you're having a conversation and you can see who it's from. So if it's from Fib Queen or Danielle or Henry or from myself or whoever, you'll see who it's from. And it's like, okay. And you may get to the point where it's like, man, doing. I don't even want to see his alerts anymore, but I definitely want to see what Henry's doing. And you could just adjust it and say, great, I just want to see what Henry's doing. So, and it's great like that. So you can kind of tailor it to your needs and to your style as well. Yeah, and the open house is Wednesday, Thursday, and Friday of next week. Yeah, there is a, by signing up for this tonight or before the open house, just so you know, is the best deal. So if you're looking at this going like, okay, this sounds great, I'm in. This quarterly package where it's $441, you get the $441 coupon. I believe what happens is after the open house, that's going to be cut in half. But then you'd get a $220 coupon, is I believe how that's going to work. So it is better if you're pretty sure, like, okay, I'm in, I want to do this. And I always think of this as a return on investment. So $441. If you thought that, okay, I'm going to buy a $4.40 call option for $440, and I expect to sell it for $6 or $7 and make a couple $100. And so that's what I look at with this too. It's like, okay, it's over the course of a quarter. Are you going to be able from these alerts to get a couple of trading ideas that at least pay for the quarterly membership? It's kind of how we look at it. It's like, okay, there should be a return on investment there. Yeah, and by the way, and if you're already a gold member, right? Yes, so you'll get to, going to, you'll be getting links for the psychology class and all that kind of stuff too. And when you click on the alerts, you get taken to the room where you can see and listen to the commentaries, questions on the live chat. Yes, so that's another cool thing too, is you can actually log into the room from your iPhone or your iPad or your Samsung. So you can click on that, and then all of a sudden you're in the room and you can ask questions. So the beauty of this is what I found is even when I'm traveling, for the alerts, what happens, I can say like, okay, I guess Henry is really bullish on Boeing. I wonder why. Oh, because it's going straight up. But I can also pop into the room and just clarify anything that's going on there. And so it's pretty amazing technology. Oh, that's nice, Deb. Deb's just saying that she tried the $7 trial and in one day made enough to pay for the entire year. And no, that's great, and that's the goal. I always say it's like, we're part of the whole idea of the room is, yeah, we're trying to do good trades, but we're also trying to keep people out of trouble. I've done this for a long time, and half the battle is just not getting yourself in situations. It's like, oh my God, what's going on here? And that's why this morning when the market gapped up, you didn't see us buying, okay, we're loading the boat on Amazon. It's like, no, we're not buying Amazon here. Either you already have it and you're selling it. And if you're totally brand new to options, we do have some beginner option courses. And generally what it is that, if you're brand new to options, you kind of start off, buying calls if you think it's bullish and buying puts if you think it's bearish. You may get a little confused is that you'll see things like, like a butterfly. Okay, if you're doing butterflies, but what will happen is you'll understand it's like, oh, okay, and get to appreciate butterflies. But you'll see, some of the things we do are very simple. You can see here Danielle. She sold her Microsoft $84 calls at her target, and she had a really good trade on Microsoft, and it's very simple. She's like buying a call at a low price and selling it at a high price. Sometimes it'll be more, I wouldn't say confusing, but if you're a newer trader and you see like an iron condor and it's like, what's that? Well, you can always ask, okay, I don't understand this. Do I have any plans of leaving the gold room, or are you with us for life? That is a great question. So the first part is I don't have any plans on leaving the gold room. And the honest answer to the second question is I enjoy a certain amount of time. I couldn't do it all day, every day. And I'll probably be trading, well into I kick the bucket. Does that mean I'll be in the room all the time? Or I honestly don't know the answer to that question. I enjoy trading, obviously, and I found that I don't like trading in a vacuum. It's kind of like, okay, that's not very exciting and meaningful, but I'm not going anywhere. I like doing this. It also, it keeps me, you have to, you got to take care of yourself. It's like, okay, I'm sitting here, I'm putting these trades out for all these people, and I want them to have a good experience. It keeps me on my game too. It's just like, all right, I gotta, I'm totally fine with people yelling at me and calling me out, but it's like, I gotta stay on my game, and I think that. Do these trades require margin, or can you do the trades in an IRA account? So I know with Thinkorswim, the IRA account with Thinkorswim, you can do spreads and things like that. Most of the time with options, it's a cash account. So if you're doing like naked options, which unless you're really experienced, we don't really recommend. Different things like that. But for the basic stuff, you're selling a spread, you're buying a put, these are all cash account based. Yeah, well, what's interesting, Jeannie, is that with this stuff now, it's easier. So, because I'm in the Cayman Islands this week, and we're on it's a working vacation. Like I'm still going to trade. It's January. I only stop trading like more in the summer. But it's great. I do some trading. I go paddle boarding. It's awesome, and that's one of the things I love about trading is that it is location independent. You know, all you need is a solid internet connection, decent, and you're good to go. And that's one thing I love about it. And it's like, you know, I kind of miss my 6-monitor setup when I'm traveling, but I got a laptop with 2 extra monitors, and it's kind of nice because you actually narrow your focus a little bit too. John, would a small account, $15,000, be sufficient to start in the trading room? So yeah, there are people in there with even slightly smaller accounts. So $15,000 is fine. And I always just say, you know, trade small, get your feet wet. You know, if you're newer, you know, it's like if you're trying to learn, just kind of like, okay, do a 1 lot, you know, or if, or even do a couple trades on a demo account just to kind of get a sense of, okay, I don't understand. What is this pinning stuff? You know, do a couple trades on a demo account just to see how they work. Yeah, and Danielle, and Danielle's she's been great, especially for the newer people too. I've been trading long. Sometimes I forget what it's like when you're first starting, and so I try to, you know, and I'll try to kind of keep things fairly simple. But oftentimes, you know, I'll say something, and then Danielle can come on later and say, well, what John was really trying to say. It's like, oh yes, okay, all right. Sure, yeah. So I'll show you a couple of pinning trades that we've got going on right now. So let's see if I can do this. So what is pinning? So like we initiated a pinning trade today in Microsoft. I don't know yet if it's going to work. You can see we sold the $87 call. We bought the 90 calls protection. We sold that for 97 cents, or that's currently 97 cents. And we're currently up $625 on the trade. And that's a 10-lot trade. So why did I do this? Well, if you look at the open interest here at the 87.50 strike, you've got 81,000 contracts on this side, and then over here you've got 58,000 contracts, okay? So if you look anywhere near there, there's nothing else even close to that. And what happens during monthly expiration, when there's very large open interest like that, it tends to act as a magnet. So we look for that stuff, and we try to set up trades that would take advantage of that scenario. What happens, okay, if this thing starts moving towards 87.50? Well, the 87.50 calls are going to lose money, so let's sell some of those 87.50 calls. And as I said, I'm not a huge fan of selling calls naked. So all this, if you don't understand spreads, all this is you're just selling the 87.50 call, and then you're buying the 90 call as a stop loss. And that way your risk is limited. And then the other one, I thought we did another one as well. Microsoft, Starbucks, I think. Oh yeah, Starbucks, we're looking for a $60 pin. And if you look at Starbucks here, again, if you look at the $60 strike, 34,000 over here, 19,000 over here. Yeah, there's some decent open interest here at 57.50, but that's pretty far away from the expected move. So we look for that stuff, and again, it's the third Friday of every month. Some of these trades set up, they're kind of layup trades in a way. They don't always work, but they actually work quite a bit, and they're fairly low risk. All right. No, so the coupons are for the store. Yeah, so they're redeemable in our store. Okay, guys. All right, guys. Well, thanks for joining us tonight. I'll leave this up here for a few minutes. So again, if you just go to simplertrading.com/house, it'll take you to this page. We will have the open house Wednesday, Thursday, and Friday of next week. And again, going up, but what I want to emphasize is that nobody's price is going up. Okay, so if you already have this, or if you're going to get this now, you're locking in the lower rate. Okay, it will be going up to $197 a month, but nobody's rate's going to be changed. What's going to happen is if next week, you know, say, I guess the week after the open house, if in 10 days you're like, okay, you know what, I really want to do this, well, it's going to be $197 a month. And the reason for this is just that we've added a lot to this, and honestly, part of this is we can't let the room get too big, and so the 197 price point can kind of weed people out, I mean, we can't. What happens if you have 10,000 people in a trading room? It's going to be impossible to trade, right? So what's going to happen is as we add more people to the room, we continue to increase the price. Now, look, for the folks that are in there, great. You get to lock in at the lower rate, but by raising the price, it actually reduces the amount of new people coming into the room. So we just, from a strategic perspective, it's like we can't have 10,000 people in the room. All right. Awesome. And yeah, so we do have a live event coming up in Austin at the end of March, and I know there are. That's always a lot of fun. It's just kind of a live trading mentorship if you have questions on that. But otherwise, yeah, I'm super excited about this. I think the technology here is a game changer for people who want to do this. When I was trading and wanting to, I worked in corporate America for 5 years while trading almost full time. I mean, I was, pretty much looking at the markets all the time. And but this was before, stuff like this. I mean, I was, I'd get on a phone and punch in a code to E-Trade to get stock quotes. I mean, that's how I kept up with the markets. I mean, I can't even imagine how many phone calls I must have made like that on landlines. So this kind of stuff is great, man. I mean, I wish I would have had something like this. And so it's kind of fun creating and being a part of something that is something that I wish I would have had, way back when. Yep, open house next week, Wednesday, Thursday, and Friday. Okay? All right, guys. Well, thank you for joining us tonight. Again, I'll leave this page up here. And for those of you that are joining the room, looking forward to seeing you guys in the room. And you don't miss the birth of your first child. Absolutely not. All right. Okay, guys. You guys have a fantastic evening. For those of you that are just signing up in seeing you in there, and also for the open house. All right, have a good night, and see you on the other side.